Well, I want to thank you all very much.
Donald Trump has been elected president, defeating Vice President Kamala Harris.
Let me tell you, we have a new star. A star is born, Elon. Look what happened. Is this crazy?
Trump is going to be the 47th president of the United States, and it is extremely crucial for investors like you and me to understand what Trump's fiscal policies, trade policies are likely to be, because using that information and assessment, what we can do is we can start building positions in the sectors that are likely to gain, and we might start to book profits or start to cut down our positions from the sectors that are likely to negatively impact. This is a high time for us to consider about doing rebalancing of our portfolios. Now, before I present to you sector by sector analysis, let me give you 5 hypercritical points explaining what is Trump's stand on various aspects. Point number 1 is taxes. He wants to reduce the taxes in the United States. Now, I don't know whether he will actually do it or not, but that's what he's been speaking about. So when taxes go down, what happens? People have more money in their pockets. And what will they do with this money? They are likely to spend more. So the consumption in the United States is likely to go up if the taxes come down. Now, that is very, very good and healthy for an economy like US, where they need to boost the spending and the consumption. But when taxes are lowered, there may be a side effect. What is the side effect? That the fiscal deficit or the gap between the expenses and the earnings of the government might really go up. And the question comes, how would he go about filling this gap up? And that brings me to my point number 2, which is the tariffs that he wants to impose. So he wants to import tariffs on products coming into the US, specifically from countries like China, and he has gone on the record to make statements like that. He might impose up to 60% tariffs on the products that are coming from China into the United States. Now, this may definitely help US government collect more tariffs, and therefore the fiscal deficit may not look that bad, but it also has another side effect that the prices of the products that are getting imported into the US with higher import duties, their prices will go up. And when that happens, what will happen? The inflation is likely to go up, and that brings me to the third critical aspect about inflation. So what we know is that in the last 2 years, inflation in the US economy has been very, very high. And as a result of that, US Fed has been increasing the repo rates to bring the inflation down. Now, if the tariffs go very, very high, what it may do is actually it might increase the inflation up, and that is generally not a very, very good sign for stock market. Again, I'll speak about that in a bit more detail when we come to the sector by sector analysis, but let me now come to point number 4, which is immigration. So Trump is against immigration because of various reasons. He thinks that people are coming from outside into the US and they do not really fit there. He also believes that Americans are losing jobs because other people are coming into the country and taking their jobs away. Now, what could be the impact of tighter immigration controls maybe on the sectors and companies like IT companies? I'll speak about that in a minute. The 5th point is around climate and how it may drive the oil and gas prices, and the EV sector is what we need to consider. So overall, Trump is a supportive of oil and gas, fossil fuels. He does not really like the EV adoption, and he actually made a statement that he wants to drill more, meaning he wants to extract more oil, more gas. And what he is trying to do here potentially is that the prices of oil and gas might come down. And what will that do? The industries or the companies that are using oil and gas as an input energy, their cost of energy may come down. And when the cost of energy comes down, what happens? The company's profitability will go up, and that's what he really wants. He wants the economy or the industries to thrive and survive, and therefore generate more and more job for American people. And just on EVs, what he said was he might undo the incentives provided by Biden's government to the EV sector because he really doesn't like EV for whatever reason. These are the 5 broad points that you need to understand before we start into the sector by sector analysis. And if you like these 5 broader points, then give this video a thumbs up. Let me know in the comments a simple thank you. Also, if you want to get practical, insightful data points from stock market, mutual funds, ETFs, you can consider joining my YouTube member community. I post almost on daily basis, bringing you a lot of insights from various aspects of stock market. With that, let's go into sector by sector analysis. I'll try to keep it very, very brief at the top level so that you understand the gist of it. With that, let's get going. The first sector that I want to speak about is the pharma sector, and to be very specific, I want to speak about the CDMO, which is Contract Development Manufacturing Organizations, a sector that you must know about. So before 2018, what was happening was a lot of US pharma companies were outsourcing the drugs manufacturing, the research capabilities into other countries because of the cheap labor. And prior to 2018, China became the top CDMO player in the world because it was 25 to 30% cheaper than many other countries. But in 2017, when Trump came into the power, what he did was he basically put lot of import tariffs on China's $60 billion imports. Now, due to these import tariffs, what happened was China started to lose the market share, and guess who started to gain from it? India. Because let's face it, India is also a very cheap labor sort of a market, and when the US companies found Chinese market to be costlier, they started to move to Indian market. And it is also anticipated that Indian CDMO market is likely to grow somewhere between 14 to 15% of CAGR, and in the next 5 to 7 years, this sector is likely to buzz like anything. A natural question you may have, Rahul, which are the companies that are into the CDMO space? So I'm going to give you a few names, but please do not take them as recommendations. So companies like Divi's Laboratory, Suven Pharma, Newlands Lab, Piramal Pharma, all these companies have a lot of their business coming from the CDMO segment, and therefore they might do better provided Trump 2.0 puts a lot of tariffs on China. Indians are likely to gain. Just to bring a couple of examples to life, for example, Piramal Pharma, as of half-yearly FY25 results, 57% of their revenues are coming from the CDMO sector. But more importantly, 24% growth has been seen in the CDMO sector for Piramal Pharma. The point is very, very simple here, that the growth rate in CDMO sector is seen very high, above normal in the pharmaceutical sector. Let me also give you a couple of examples. So for example, Jubilant Pharmova, again, not a recommendation here, but if you see their CDMO business growth rate in the Q2 of 2025, EBITDA margin grew by almost 59%. My point is very, very simple, that the CDMO sector within the pharma is a very, very fast growing sector, and what you need to do is go and start researching companies that are operating in this segment. The second side note that I want you to be aware is an act called Biosecure Act, which is very recently passed by the US House. What this Biosecure Act really does is that it restricts 5 big Chinese companies to trade with the US companies. You can see the names here: Genomics, BGI, MGI, etc. And due to these trade restrictions, what is likely to happen is that more and more business is likely to come to India. The second sector that I want to speak about very quickly is IT sector. So US is the largest market for Indian tech sector. Almost $254 billion of money is what we are getting from US companies coming into the IT tech sector. Now, as you might have seen from the beginning of the video, that Trump does not like immigration. He doesn't really want people to come into US and take away US people's job. Therefore, if we look at the H1B visas rejection rates, it had gone up from only 4% in 2015 to 17% in 2019, right? So the rejection rate of H1 visas went up when he came into power first time. Also, if you look at the L1 visas, the denial rate went up to around 12%. So all in all, there is a big fear out there that because Trump is coming back into power, what may happen is that IT companies may struggle to send people from India to US, and therefore it might impact their profitability, revenues and whatnot. But to be honest, I don't think that is going to be a driving factor, because it was a driving factor back in 2017, but after that Indian IT companies have matured. They've learned from that particular lesson that happened in 2017, and what they did was they started to hire local people, American people based in America, to do the job that is needed to be done onshore. And if you look at the data, you will see that almost 200k American people were hired back in 2021. So I don't think there is going to be a negative impact on IT sector per se, but there are few positive things that I see. For example, number one is the corporation tax. So if the corporate tax comes down from 21% to 15%, that's what Trump has been talking about, then what is likely to happen is the profitability of many companies within the US is likely to go up because their tax has come down. And when the profitability of these companies are going up, they're likely to spend more on IT, in my view. For example, discretionary spending that has been slowed down in the last 2 years, it might go back up because of the reduction in the corporate tax. And even more important point that you need to know is that Trump does not like regulations in the banking sector. He's more a free sort of a person. He wants to deregulate a lot of things in the US banking sector. And that is why when the results were announced, the banking stocks in US actually took some rally, 12% rally some of the stocks got in US at that time. So coming back to IT sector in India, I don't think there is going to be a negative impact because of the H1B visa issues. In fact, there is likely to be a positive impact on IT companies, but the most important point that we need to ask is the valuation. So if I look at the Nifty IT index, you will note that the PE ratio right now is 33. And if you look at the historical averages, 5-year average PE is 28. To me, it looks like the IT valuations are slightly stretched, to be honest, if you look at the 5 years of view. So you really need to be very, very specific about which companies you want to target in Indian IT space. In my view, the companies that are relying on the discretionary spending might do well. Companies like Wipro, companies like Birlasoft, a lot of their revenues come from discretionary spending, might get benefited. Again, not stock recommendations, but I've given you a very general view of what the IT sector may look like under Trump's second term. If you're still with me, request you to hit the like button before I move to sector number 3, which is banking and NBFC. So important point that you need to learn here is that if Trump imposes high tariffs, then what is likely to happen? The product's prices in US is likely to go up on certain items. That might lead to the increase in inflation in the US. And that might really be a big headache for the US Fed, because they have been trying to bring the inflation down. And that's why they've been increasing the US Fed rate. But very recently, they started to reverse the cycle wherein they started to reduce the Fed rate because inflation has already come under control. Now, if Trump imposes tariffs, then what may happen is that inflation may go back up. That means that the Fed may go very, very easy in terms of not reducing the Fed rates further. That means that the interest rates in the US may still remain higher. And when that happens, what happens is that Indian banks and Indian NBFCs, non-banking financial companies, when they raise any funds from the US, and if they borrow from US, then they will borrow at a slightly higher interest rate. So that might be really a negative impact to banking and NBFC sector in general to India, the companies that are raising the money from the US market. The second side effect of the US Fed not really reducing the interest rate in US might be that RBI also might go slow or might not even reduce the interest rates. I don't know, I can't promise that. But if that happens, then we are going to see slightly negative impact on the banking and NBFC stocks in India. But the good news is the valuation. So if you have a look at my screen, Bank Nifty's PE ratio is only 14.2. And if I put this in some historical data perspective, in the last 5 years, if you look at the PE ratio, this is now lowest. So from a valuations perspective, right now, Bank Nifty to me doesn't really look overvalued at all. In fact, it is massively undervalued. If you look at the 5 years average PE ratio of Nifty Bank, it is around 21.34. Right now, we are running at 14. So it is well below the 5-year average PE ratio. So I don't think we need to panic about banking and NBFC companies, because the economy in India is also growing at a very, very healthy rate, and banking and NBFC is the backbone of any economy. So I really don't think there is a big negative impact coming because of the higher tariffs that might get imposed by Trump. Moving on to fourth sector, which is chemical sector, there is a potential for a big policy change in the US policies around environment and climate, and that may impact chemical sector a lot in India. When Trump came to power first time, what happened was he imposed a lot of tariffs on chemicals that were being imported in US. For example, if you look at this chart, you will see that back in 2018, the collected tariffs were somewhere around $3 billion. By the middle of 2021, it shot up to $12 billion, almost 4 times in the matter of 4 years. So there is a likelihood that he might impose a lot of tariffs on chemicals that are being imported in US, and that may impact Indian chemical sector. Just to put this in context, India's chemical export to the US is the highest. And as compared to 23, in 24, we saw around 26% reduction in our exports to US in the chemical sector. And we know that from last couple of years, Indian chemical stocks have been struggling. Overall, chemical stocks have been under pressure because of various other reasons, but US tariffs also play an important role. Now, what experts may believe is that if US imposes more tariffs on China, and if Chinese chemicals do not enter into US, it might give competitive advantage to India again. But it really depends where China will dump these chemicals in other markets, and what is going to be the counter impact to Indian export to other countries is also likely to play out. So it's extremely hard to judge right now. So this is going to be wait and watch situation in the chemical stocks. I really do not have large positions built in chemical stocks because there are a number of variables that impact this sector, and generally I like to keep very light positions in the chemical stocks. Now I present to you the last segment of this video, which is about Nifty Commodity Index. So Nifty Commodity Index covers many stocks across multiple sectors. So for example, power, construction materials, capital goods, chemicals, metals, oil, etc. Now let me give you 2 minutes commentary about these sectors. So in my view, power, construction material and capital goods, these 3 sectors are more reliant on India's infra growth. And to be honest, I remain very, very bullish on India's infra growth. Although right now the sentimental fears are going on and the power stocks have seen some pressure in the recent time, but overall on a mid to long term basis, I am particularly bullish on power sector, construction material and capital goods. And also I think that there is likely to be limited impact because of what's going on in US on these three sectors from mid to long term perspective. But if you look at, for example, chemical sector, I spoke about that very, very briefly in the previous segment. If I speak about the metal and mining sector, interesting one to look at, highly cyclic sector, very, very complex to understand. But here are few points. Point number one is, as soon as Trump's victory was announced, few metal stocks in US saw some rally going up. Around 10% rally was seen in the 4 largest US steelmaker companies. Now, what does this really mean from Indian metal stocks perspective? So 3 points that I want us to focus on. Point number one is that again, the import tariffs, if they are more and more import tariffs on China, then India's metal industry is likely to gain, because after China, we are the largest exporter of metals to US. However, China is not stupid. In the last 5 to 7 years, they have been building, the Chinese companies have been building ways to export metals to US industry via indirect routes, like for example, going to Vietnam, going to Korea, going to Mexico and these locations, by setting up either the legal entities there or by entering into JV. So I don't think China is stupid. They have actually set up processes to de-risk the export from China into US, albeit direct export from China to US might get hampered, but the indirect will still continue. Now comes the second important point, that US dollar is likely to get more stronger in the coming quarters because of the higher consumption in US, better economic growth, hopefully. And when US dollar strengthens, what happens typically is there is a pressure on the commodity prices. So metal prices may remain under pressure in the next few quarters. Of course, there are other variables as well that might impact metal prices, but this is the one that we can see from Trump's victory's perspective. And the third point is that Trump is less likely to support the renewable energy sector, and therefore aluminum, copper that are being used in the renewable energy sector might see some slower demand, and therefore it might be under pressure from a pricing point of view. So all in all, it's extremely hard to check what is likely to happen in metal and mining space, but it is a very, very cyclic industry, cyclic sector. I have very, very limited positions in the metal and mining because of so many variables that might impact the metal sector, but hopefully this commentary would have helped you make some important decisions. Now comes my last point around oil, gas and consumable fuel sector. So what is likely to happen? So there is a narrative in the market that if Trump brings peace between Russia and Ukraine, and if Russia's oil supply starts to go back to the global market, then the supply of oil will be higher, and therefore the prices of oil might start to see some pressure. The oil prices might come down. And whenever oil prices come down, the 3 sectors in India get benefited. One is paint sector, second is the oil marketing companies like IOCL, BPCL, HPCL, and third is the aviation sector, because these 3 sectors, they use oil as an input material, and when oil prices go up, these companies struggle, these sectors struggle. But when oil prices come down, these companies really have good profitability, and therefore they might really see some rally, some positive movement coming up. So in this video, I've covered a lot of details around specific sectors, and these are all my point of view. Please do not take these buy sell recommendations. I hope you really liked this point of view, and I hope you really liked this research. And if you did, just like the video, let me know in the comments a simple thank you. It will motivate me to do more research for you at zero cost. With that, I hope to see you in my next video. Until then, keep rocking.